And, well, there's a lot of problems in the world, problems starting to come to the surface, can't be covered up anymore. And hey, one person who's been exposing them for many years is Danielle Park of jugglingdynamite.com. Hey, Danielle, good to talk to you.
Hey, Carrie.
Hey, so you got a good article here on your site, Dumb, Desperate Policies Slowing Growth Further, which I guess isn't exactly a surprise, only in that the recognition of this state of affairs is kind of just coming to the forefront.
Well, yeah, and, I think we're at this pivotal point in human history here where we've been through the 20 years of faith in central bank policies to the point where there's nothing left at all, and they've degraded any credibility that once was there to just a mockery. So you're getting stories like, the negative interest rate scenarios, which is from the sublime to the ridiculous policies that were instigated in the European zone in the past couple of years and in Japan. And the revelation hitting that, my goodness, not only are we not making any money on deposits, and that's creating huge holes and deficits in savings plans and pensions and institutions all around the world, but now we're actually in a negative interest rate scenario, which defies any kind of logic of the way things work in the world. And that's just making it worse. So people are having to save even more money to try and get any sort of pool of funds available for specific purposes, whether it be to fund, a need in the future or whether it's just for pure retirement. Banks are having trouble making, God forbid the banks should have trouble, Carrie, but that's really the meat of the matter. The banks are having a hell of a time making profits in this environment. So that's catching the attention of, the central planners. And it's just the whole thing is slowing growth further. So if you think about what's happened since February, we had equity markets rally strongly as the U.S. dollar weakened, commodities took off, Canadian dollar, Aussie dollar, everything took off. And why? Why, Carrie? Why did that happen? Well, the best answer is that things got oversold on a technical basis and that the central bankers had a bunch of meetings coming up and traders thought, well, we'll pile on because the monkeys will be out promising nonsense for a while here in a succession of meetings, and the algos will go crazy off of those headlines. And it was successful because for 2.5 months, the risk trade boomed and everything seemed to be, looking positive again. But the reality is that it's all built on nonsense. And so demand has actually weakened further in the last few months because of what I just said. Less money to go around, less money to spend, no actual stimulus coming into the economy, no meaningful infrastructure build out, nothing really substantive happening except a bunch of nonsense and trading. And we know that, there was a report out of the ECB that just underlines there's this obvious front running going on of publicly tradable information in the world every time there's a major economic release, every time there's a central bank policy decision coming up, there's leaks to certain people and they trade, the hell out of it. But it's all a complete facade. So really now we're coming to this again where 2.5 months ago things seemed to be mean reverting, they bounced, and now people are looking around going, wait a minute, prices are way up here again. Meanwhile, there's nothing changed and growth is worse. Q1 earnings for the S&P were negative and Q2 is looking negative. So, valuations have only gotten that much worse in the past couple of months.
Yeah. So I guess it's time for a new approach to things, and that requires a complete acknowledgement or recognition that what they've been trying to do isn't working at all. I mean, it's having the reverse effect.
Maybe they won't ever admit it. Maybe they're incapable of admitting their own failings or their limitations. Maybe they have some kind of a complex that doesn't allow them to acknowledge that they've run to the end of their runway. But, at some point, time goes on and it's an irrelevance factor. So if there isn't any other great policy initiative and we've got these egregious valuations again, which we do, and debt levels have only boomed in the last 5 years, that's all just weight on the economy everywhere. So it's worse for places like Canada, frankly, because every time oil bounces, people think, the banks think that they can extend a bit more dollars into the corporate sector, and households think they can borrow a few more bucks to spend. And then they realize that that was just a fleeting trade for a couple of months, and nothing substantive has improved, and the world is, weakening further, and there's more supply of stuff that people don't need. So it just leaves these bigger and bigger hangovers. And at some point, I think the markets just finally have to break, because there's no upward momentum. You're not really making progress when you lose ground and remake it again over a couple of months, lose ground and remake it. There's nothing really going on there.
Right.
So you get trading then shifting to the short side, and I think that'll be the next driver that'll make big moves in the whole price structure.
Yeah. Well, at some point, if you don't face reality, just because you don't face it doesn't mean it's not happening, and the consequences are going to be felt by all who basically have had their heads in the sand and are in denial over this.
Yeah. There's some interesting study I saw recently. So defining this whole business of middle class, right? So you hear all your political rhetoric is very much focused on how to help the middle class, and what is the middle class and all that. So there was some specific aspects of it defined. So in North America, middle class is considered someone who can afford to own their own home. That means pay for a mortgage, essentially, is what that means. Have a car for each of the adults, education for the children, and health care, and one vacation a year. Okay, so that was the general, what do we mean by middle class? That's what we basically mean. So it turns out in Canada, you need to have about $120,000 a year of income to support that. And in the US, you need about $130,000 a year of household income to support that. So what do you think what's the reality of household income in our countries, Carrie? Do you know what the median household income is?
Median household income somewhere in that 60 to 70,000 range, I think.
Somewhere in the $53,000 range in the United States. And in Canada, it's around the $88,000 range for median. But only the very top sort of 5% of the population can afford what's considered a middle class lifestyle today. And that's with interest rates at the lowest they've been in centuries. So, when you look at financing costs for things like cars and houses, you would think that this is the most affordable they've ever been. So it just gives you a sense of how far out of whack, the monetary theorists have inflated all these asset values, and the incomes of the people who ride the asset values higher, the commissioned people, the transaction-based people, that get compensated based on the inflated asset bubbles. They have this one realm of reality, and the rest of the world is just nowhere near it. And that's why I think, the truth gets out in the end, because you cannot literally continue to keep a farce alive indefinitely without the masses just, the weight of those masses not being able to keep up with that fantasy just comes back to haunt you. So I think that mean reversion process is inevitable, and it's happening. And it's going to continue, and lower prices are part of the solution. And, that's why I think in the end, truth wins out.
Yeah, well, it's so interesting because for so many years in the U.S., household debt, way eclipsed increased income, increasing, household debt is way past the rise in GDP. So I know GDP is flawed measurement, but it's pretty much the only one we have. How long can a situation go where you're borrowing more, you're increasing your debt more than your income's going up, whether it's as an individual, a country, a city, a state, or a corporation? How long does that go on before you hit a brick wall, which largely is what happened in 08-09?
Yeah, and you're at that point now where you're putting in, what was the latest statistic? I was just trying to find that because I actually was just writing about that recently. but the amount of debt that's being added is about 4 times the benefit of whatever so-called increase in growth you're getting or increase in GDP you're getting. So we're already, this is the multiplier effect gone loopy, right? Like the multiplier effect being if you spend $1, you'll get 3 back in return in growth. Well, we've turned that all on its head now because we put so much debt into the system. It's you put in $3 and you get back $1 of growth, or less. More like you put in $4 and you get of debt and you get $1 of growth. Like it's just gone the wrong way. So that's sort of the forces of nature or of gravity or of reality that are much stronger and larger than any policymakers or people that wish to hope that they control the laws of the universe, but in fact they don't.
Yeah, well, arguably, I think we've gotten to the point, if we're not there already, where the increased debt actually decreases economic activity.
Absolutely, we're there for sure.
Yeah.
I mean, we were there probably by 2000, and in most developed countries, we were there heading into the Great Recession. But that's only got that much worse. So we're certainly there in terms of total debt in the world. It's and at some point there's just not enough currency, for example, in circulation to actually repay the debts that are outstanding. And once you realize that, then we're back to, okay, we're going to have to cut off some of this stuff. It's bad debt. It won't be repaid. That's the reality. And so repricing begins to reflect that.
And then that has, at least initially, the jolt from that is like a 1-2 punch. Because not only have you not been growing as a result of the increase in debt, but you've actually been contracting, and then you have to write off that debt, which has all sorts of consequences, and you literally wind up in the worst of all possible worlds here.
Well, but the big losses really come to those that are the most levered to the fantasy that's been going on. So again, the people who are disproportionately enriched today on paper because of the Fed's policies that have driven their asset holdings to these nosebleed levels, those are a tiny fraction of the population. So they could lose a whole bunch of zeros, and the levered ones will have catastrophic financial impacts, but the ones that aren't highly levered, they just won't have as much money on paper anymore. As far as the middle class goes, they've been living with these numbers already for a long time. So, there's in some ways there's nowhere to go but up. It's just a question of increasing efficiency at this stage. People have to really focus on, how to build up their own strength. And that's very often the opposite of what they're being told by, the people that are trying to keep the game going.
Oh, yeah. Well, we know that. We've seen that, many, many a time here where they're, the best thing you could do is invest in yourself, build up your skills, come up with a new career or side businesses, whatever. Probably easier for labor-based type businesses to do than for ordinary knowledge-based businesses, but always investing in yourself. But that doesn't necessarily mean taking on, all this education debt either, because, the schools are not the only source of those skills that you need to really prosper in this new economy.
Absolutely. Well, that's another thing. That's another interesting statistic, right? Because in a world where inflation has barely averaged 2% over the last 15 years, the rate of inflation in education costs has gone up something like 8 or 9% a year. So, 4 times the actual inflation of other goods. And why is that, Carrie? Why has that been able to sustain itself? Number one, there's been this push, this belief that in order to be competitive, we have to get more educated. At the root of that, there's some truth to it. But the only reason prices have been able to go up at that pace is because there's been a willingness and, wait for it, an access to credit, right? If there wasn't the access to credit, you simply wouldn't have the customers that would be able to keep that, a price appreciation going. So we have come to the end, I think, of that road as well. We need to go back to a more cost-effective, efficient manner of educating people. And whether that is, online, whether that is community-based colleges, whether that is, a model that was in play 30 years ago, at some point, you've priced yourself right out of the market and it's no longer feasible. You've got the overhang of all these kids that'll never be able to leave their parents' house. And you expect them to come in and start helping you with the economy. It's that they have no spending power at this point.
Yeah, well, it's the phenomena of the kid living in the basement, right? And God, it's awful, but
I recently watched Where to Invade Next, the Michael Moore documentary, and whether you're a fan of Michael Moore or not is irrelevant. It's a very interesting concept. He goes around various countries in the world and looks at things they do that make sense, like how to run a more efficient education system, how to run a more efficient health system, how to get more representation of women into roles of influence in the society and business, and what impact that had. There's a lot of good ideas in the world. We just have how to reform your criminal justice system so that it's not this for-profit institution that keeps sucking in more and more of your resources and people and young people.
Yes. Oh, that's so true. It's such a crime.
It's really quite enlightening. So for people that say, it's all darkness, there's no hope, there's no solutions, I say that's nonsense. There's lots of solutions. But, you have to, I guess, get to the point where people are so fed up with the old approaches that they're truly willing and able to try something new.
Yeah. Oh, you're so right. Well, that's the situation the world finds itself in now, Danielle. I think we're getting to the point there's going to be a massive reality check. And I think at that point, attitudes, policies, beliefs, and actions are going to change big time. But let's see when that happens. We're getting closer, that's for sure. So check out Danielle's work at jugglingdynamite.com.